Time is more valuable than money. You can get more money, but you cannot get more time. Jim Rohn. And Jim is right. All these quotes I give you every day I think are right, otherwise I wouldn't bring them to you. But this one in particular I really like because we all seem to focus so much on money and not time. And my friends, if you devote the right amount of time to your money, you can have all the money you want. I truly believe that. What we do here every day for you is we show you weekly vertical crossovers. That is when the price percent oscillator crosses over the red signal line, going up or down. And you know what's so beautiful and magical about that is we can see it happen time and time and time again. And on a good chart, it works over and over and over. What's a good chart? That is a chart that is trackable, whether it's an ETF or a stock, and we teach you how to figure out if it is trackable every single day here on the show for free. All you have to do is tune in 10 to 15 minutes. Let's jump into these charts. S&P 500 down a little bit for the day, 0.42%. The Qs, the NASDAQ 100 down too. We see stocks and gold up, which is the way the world is supposed to be. Not that the market is down, but when the market's down, gold and bonds are up. And when gold and bonds are down, the stock market's supposed to be up. When that doesn't occur, that's an anomaly. It's not the way things are supposed to be. It doesn't show good health. So we're seeing that today. And let's focus on what we see. Now, what's interesting is our Heiken Ashi candlesticks are actually showing us up movement in average pace, but we can see the price percent oscillators lost a little bit of energy, derivative oscillator heading down. We look at the 2-day chart, check out the bounce off. We're seeing not a crossover going up on the S&P 500, but it's not passing through. We do have a green up candle. Remember, these are Heiken Ashi candlesticks. They help us see average pace in price movement. If you haven't taken our training, I'm going to put it at the end of today's program. You will see it there. Oh, the special training we have for all of our subscribers, and you can be a subscriber too. It is for free. How do you become a subscriber? You just go to chartingwealth.com and sign up. Fractional shares, the next step after paper trading. If you're tired of paper trading and you want to start, you put a little bit of money on the line with a fractional share, $50, $100, and you can practice real money trading. With a little bit of money, it will help you hone your skills. Now, you may lose some of that money, but again, you're going to learn how to truly enter a trade, how to set a good till canceled sell order, and how to exit a trade. And again, after you've paper traded for a while and you've got some understanding of what's going on, I encourage you to at least consider doing that, putting a little bit of money on the line. And again, you can lose money. We're not a stock calling service. We're an education firm, but we want you to get educated on how to actually enter a trade, even if it's $50 or $100. I mean, okay, if you lose 5%, 10%, gosh, God forbid, 20% of that, what is that? It's $20 on $100, okay? So again, gonna give you some real skills once you've gotten a feel for what it is we do every day. And of course, buy the book if you don't have it. Now, you'll see that link in the show notes. Let's look at the 2-day chart. We said bouncing away so far, first day of this week, first day of the latest 2-day candle. Derivative oscillator, however, still oscillating upwards. We go to the 4-hour, or the half-day chart rather, and we just see sort of a sideways slide, not much action in the morning. And again, what's happening? We can see that we've fallen below the 2-day trend line. That's where trend lines are helpful. Price percent oscillator's flat. Derivative oscillator looks like it's, a little negative. So we're going to leave the S&P 500 and go to the Qs. Now the Qs down considerably more, down 1.27%. But again, as we start off with the weekly chart, we can see where we plumbed a higher high and again did not end there. But we see the price percent oscillator of course, losing some upward momentum. Derivative oscillator also. Go to the 2-day chart. What do we see there? We see the price percent oscillator canting down. Derivative oscillator losing momentum also. First day of the latest 2-day candle. We can see that it's still moving up on the 2-day trend line well above the weekly. Half-day chart, that's where we see the drop sort of sideways in the morning and down in the afternoon. Price percent oscillator hasn't crossed over going down, still above the 2-day, but crossed through the weekly in the afternoon. Derivative oscillator also losing momentum. So we see stocks weakening, starting the week off. Now we go to bonds. Bonds up 0.22%. Still don't have a crossover going up on bonds. Derivative oscillator losing downward momentum. Price percent oscillator about flat. And as we start the week off with the candle, we can see we haven't reached a higher high even during the first day. We look at the 2-day chart. Shows us, of course, the same thing as far as highs go. We are above the 2-day trend line, below the half-day trend line. Price percent oscillator heading up. Derivative oscillator gaining upward momentum. And we can see the 4-hour chart. Look at that. Sideways sliding. Lots of indecision for a day and a half now. So again, price is just above the 4-hour trend line. So we'll watch and see how things continue to move. But again, we've got the weekly down, the 2-day up. And we've just got to wait and see how bonds sort themselves out. Is there going to be enough up movement at some point to pull the weekly over? Or is the 2-day going to weaken and pull back through and pull the weekly down? Don't know. Don't know at this point. But again, looking at the candles, they would lead you to believe that things may continue to go up, but we just don't know. So guess what we do? We bide our time. We wait. We're smart. We don't have to trade. And until you get the signals of a weekly vertical crossover or, not as good, a 2-day recross, and those are both explained in the book, and we talk about them all the time here. Until you get one of those, you just wait, my friends. You don't go out there and gamble. Gambling's what you do in Las Vegas. If you're gambling in the stock market, in your practice trades, you're being foolish and you're going to lose. Now, go back to the weekly chart, head to gold. Gold up just a little bit, 0.09%. Starting off the week. We're not reaching a higher high on Monday. That would be nice to see. Doesn't mean that won't happen by the end of the week. Price percent oscillator still away from the red signal line, but man, it's not carving away strongly. So we'll wait and see how gold continues to do. Up, like I said, just a little bit, 0.09%. So not even 0.1%. We do see on the 2-day chart prices above that, but again, not reaching a higher high above the weekly. We can see where the price percent oscillator is flattening. Derivative oscillator still losing upward momentum on the first day of that 2-day candle. In the half-day chart, we saw just nothing in the morning and up a little in the afternoon, but still hasn't managed to cross over, going up on that 4-hour chart. So that is where we keep just waiting to see, is that going to cross over going up? Hasn't yet. So again, if you're in that gold practice trade, continue to watch it like a hawk, particularly your 2-day, which again is not showing a whole lot of strength, and the weekly is weak, not pulling strongly away from the red signal line. So keep your eyes on it like a hawk. Now, that's where we are covering our 4 big charts. If that's all you're interested in, you're done for the day. Thank you so much. If you live overseas and want to buy our book, you can find the link in the show notes. If you live in the United States, you can find the link in the show notes and go through Square. If you live overseas, you need to email us, cw@chartingwealth.com. We'll send you a PayPal invoice. For some reason, Square, our credit card clearing service, will not allow your foreign credit card. I don't know why. But if you live in the States, follow the link in the show notes. Live overseas, email us, cw@chartingwealth.com. We'll get your book out to you, an autographed copy, whether you're in the States or overseas. And again, we appreciate you. We also appreciate our Patreon supporters and our students that are in the Accelerated Market Mastery class. If you were listening and you did not get the first training last night along with an e-version of our book, Charting Your Way to Wealth, second edition, and all the additional learning library, then something's gone wrong. Either check your spam filter or email us, cw@chartingwealth.com, and let us know that you didn't get the training, but I sent it out to all of you. Hopefully we don't have any foul ups in any addresses, but this is the time to let us know. Now, let's jump into Bitcoin, then real estate, then oil. The only one that's up out of all three is Bitcoin, up 1.49%. Now look at that weekly chart. Bitcoin is still technically up because the price percent oscillator is not crossed over going down, trying to draw a little green candle for the week. Look at the 2-day though. We got to have a 2-day recross before you can jump into an up movement on Bitcoin. And it has really slid off its high mark and just sort of sideways and down. So we're waiting to see if Bitcoin's going to cross back over. Watch for the 2-day recross. Remember, that will happen at the close of a 2-day candle. Now, if it's the first day of a 2-day candle like it is now, you don't have it until the 2-day candle closes. So if for some reason tomorrow was a huge up day and on Tuesday Bitcoin crossed over going up on the price percent oscillator on the 2-day chart at the end of the day on Tuesday around 350, that would be your point to seriously consider buying in for a practice trade on an up move on Bitcoin. That's just an example. I don't think that's going to happen. But if it did, your next opportunity would, of course, be Thursday, 2 days later. Candle's never a candle until it's completely drawn. We go to the half-day chart. We can see nothing in the morning and then up movement there in the afternoon. Okay, so we are going to go from Bitcoin to real estate. What do we see going on there? Well, we see as far as VNQ, which is the largest, is the Vanguard Real Estate Investment Trust Exchange Traded Fund. We see the week, let's start off on the week. We see going down 1.05% for the day, starting off with a red down candle on that weekly chart, weakening of the price percent oscillator and the derivative oscillator. Go to the 2-day chart, still down, have been hoping for a recross. That's just not occurring. That would have to happen again to get you into an up move. And then what do we see on the 4-hour, the half-day chart rather, sliding sideways and down. So that's where we are as far as real estate goes. Lastly, we go to gold. Our biggest downer, gold. I do that. Forgive me. Black gold, oil. We see down for the day 1.83%. Starting the week off with a little red open box candle, meaning a slowing down in what had been up movement. Price percent oscillator, though, still trying to pull away from the red signal line. Derivative oscillator starting the week off, heading down. 2-day chart, weakening, flattening. We can see a red spinning top, solid one, which means more potential for down movement than the open box one. And we go to the half-day chart down there in the afternoon. We see the price percent oscillator pulling away from the red signal line. So again, keep your eye on oil if you were in that trade, because remember, we had a practice trade set itself up with that crossover going up back in early July. That's where we are, folks, as we end the day. Thank you so much for being with us. We'd love to hear from you. Feel free to reach out, cw@chartingwealth.com. God bless. All the best from the whole team at Charting Wealth World Headquarters.